Good weekend. Ira Epstein of Linn Associates with your weekend edition of your agriculture update for this Friday, the first day of March 2019. So here we are with the market that finally, the word is finally, found some footing. Got down to the $9 level in the soybeans before that occurred. You can see wheat came back today 10 cents off its lows and corn 7. So we found an area where the market had stretched itself, be it the end of the week, the market wanted profit taking or some other event, but it occurred, and that's the good news, that it finally occurred. When we go to the charts, if you go to your daily chart, you'll see where the Bollinger Bands came in and where that part fell. The dollar has been strong a good part of the week. It actually closed a little stronger than this, but these are the last quotes of the day. And the stock market came back, and it was a mixed day. I'll probably go into that in the financial market as to what threw these markets all over the board, but interest rates have been moving up, energy prices down, grains finding their footing. Now, so we take a look at a monthly area chart of closes. This is just closing prices, and you connect them. The market has been coming off that 833 level. As you can see, it finished off this week at 899.25. When we go to the weekly bar chart of soybeans, and we're looking here at the Fibonacci count going from this 1017 high made last March all the way down to the July low of 810.5, and that's a year ago March. Keep that in the back of your mind. We've gotten into this area where the battleground is shaped at a 38% retracement from the low to the first bounce. That's often an area where the market has trouble. We can call these boxes, if you will. And it's where the market finds from that resistance to the 50% level some resistance, and that's where you're at right now. When I look at the swing line study, it shows the market in a downtrend, and this week is an important week, the one that we just went through. And the reason is you have on this week an outside week down. So you took out the previous week's high and low, closed lower on the week. I believe that if you take out the high of an outside week down within the week following or the week after that, 2-week period, if that's taken out, the market often then says it's a trap for those that sold on the low side, and the market tries to give a bounce. The question is, where can that bounce carry? Because the battleground's happening right now against the 18-week average of closes, just the way it's done before. Notice how the market pulled back, bounced away and back there. If you got over that, I can make an argument that you go to the closest of the 100-day average or the upper Bollinger Band, which is closer to the 930 level. So if you got over that, it's not a big deal from this week's high because you were at 921, but it'd be enough to capture, I think, some attention of the market and say it got too cheap. Let's assume that doesn't occur and the market stays, it doesn't take that high up. Well, resistance is this $9 level where you're basically at. If you thrust down, the lower Bollinger Band comes into play in that 870 zone. Momentum in the market pointing down. So in summation, I believe you're in a downtrend because you have lower highs, lower lows. You settled under the 18-week average of closes, momentum pointing down. In the soy meal, you've had the sideways action. See it right here? Now, last week you started pushing on the bottom of the Bollinger Band. You haven't given that up. If this is a breakout, be careful here. This area becomes a top of significance, and the market can start being a lot stronger to the downside than people think. Right now, the bears have total control of the market. Yes, it's pushing on the lower Bollinger Band, and it closed this week over it. That lower band's 302.20. You finished at 303.30, so it's just bending that band down. We're in a technical support zone, but if it keeps pushing on it, watch out. It picks up momentum, and then this area becomes enough power to kick it down probably into under the 290 level. The market that is just a whipsaw here is soybean oil. You get higher highs, you get break lows, you don't go following through one way or the other. I think there's formidable resistance between the upper Bollinger Band of 30.97 to 31.14. If you were to take out 29.62, well, then you might make an argument to get back to that 18-week average of closes. I hope I didn't say day average on the other charts. I'm talking the weekly charts, all the averages should be that. Momentum is also trying to point down now. So it's a market with a lot of divergence on it. In the corn market, you went right down to key numbers. First, your momentum is down. You've been in a downtrend. You've had one. You can see where this was. And now the market for this week, if it kept going down, you have two areas that you look at, the 100-week average of close and the lower Bollinger Band. The market went to both and was able to spin back away from the low part of the lower Bollinger Band. The resistance is still the 100 now week average of closes. What was support becomes a bit of resistance when you bounce back and momentum is there. In the wheat market, this has just been a market that fell and fell sharply. Look at this breakout from the 531.25 a month ago to where you're at now, believe it or not, almost $1 a bushel cheaper. That's quite a bit. The market paid little heed to the 100-week average of closes. That was the challenge last week, and it just slid. It's what I call a free fall market. But again, remember what I said on the meal. See the sideways action? That's where things start, is in the sideways action. And once it starts pressing, be careful. You don't get overbought or oversold on weekly charts in the slow stochastic, in my opinion. It's just the momentum pointing up or down. In the cocoa market, you're at a key zone for a battle. You're at the 18-week average of closes. Support we've tested once at the 100-week. The market had a bounce, couldn't quite get to the Bollinger Bands, and just pulled back here. So we're not trending on the weekly chart. We have a lower low and a higher high. In order to get a trend going, you actually have to take this week's high out. Then, without taking out the low, you could make an argument you'd have higher lows. You've already got the higher highs. If you just broke down through this 2169, you're still stuck with the 20, with the higher high, the lower low pattern. Got it? So, important zone. In the sugar market, this is an important level, this 1272 zone. The market's had a pattern of higher lows, higher highs. Momentum turned down before price did. Then price started following it, and that's where you're at right now. So I think the battleground, it closed at 1262, is this level here, down into as low as 1201. Who's in control of the market? Nobody right now on the weekly chart. While the swing line has the higher lows, higher highs, the settlement price was under the 18-week average, so the bias is down. You have bias down, momentum down, but the swing line up, nobody in control. In the coffee market, the market is number one, still got momentum to the downside. Now, you had a good reversal and you closed higher. On the daily charts, the slow stochastic lost its embedded reading, which often leads to price in the 18-day average, a rally happening to bring that up to the 18-day average of closes. We're not seeing that on the weekly. What the weekly is saying, when I look at it, that yes, you might get a short covering rally on the day charts, but you still have a big downtrend with a lot of resistance here at the 103.75 level. A little later in March, about a week from now, the seasonals kick into the downside, so I'd be watching that. In the cotton market, you have a market that's just laying flat in momentum. You've seen price now for 3 weeks. It's really gone nowhere. The trend-side market is still got lower highs and lower lows, but it's in a stall, and I'm watching how momentum is ever so slowly creeping to the upside. This market's a candidate that if it can get through 72.99 to possibly challenge the upper 18-week average of close at 74.71. Cattle market still definitely in a bull camp right here. You can see that with the higher lows, higher highs. The hog market has been in a downtrend, found its footing last week and this week at the lower Bollinger Band, the black lines. Why is that important? Only 5% of the time will the market trade over or above, or actually settle over or above the upper Bollinger Band. So I view it, the first challenge, be it on the upside or downside, as an area where support often shows. A lot will, of course, look at, are you going sideways like you are here? So that's what we're doing right now. You know, one of the ways I want you to start your mornings off, I'd love it, is for you to join me in the mornings at my subscriber video. If you think these are fun, you're not getting the meat of what I do. This is what my charts look like. I'm not in them. I record in my other studio, and I've got my computer, and you're seeing my screens. They'll be in these colors. These are the lines that will be on them. I teach, I explain how those lines work. sit down, have a cup of coffee, and here's the neat part. You can drag on the bottom of the video. So if you want to get to any of these sections, you don't want the other sections, just drag and pull. You'll see that it's easy to get to. They typically are in your hand by 9 a.m. Central Standard Time. I like to record right as the meat market opens because we have a lot of people that trade in the meats. And if you look at the chart action, I'm going to describe what I see. I'll tell you what I see the pros doing in the market. And I'm in the Board of Trade building. You think I don't talk to a lot of the pros? You'd be sadly mistaken. I'll be on Bloomberg, by the way, this coming Monday morning. I think it is March 4th at 9:50 in the morning if you want to watch that. You get my technical and fundamental analysis and then my specific trade ideas. And boy, do I have them. I will throw out everything I see in terms of buy here, sell there, put a stop here, look for this to happen. Will I be wrong? Count on it. Will I be right? Count on it. You'll see both sides, and that's what trading's about. But I think what you'll see is money management. You'll see education. 5 decades of doing this. I've got a lot of experience. Let me share it with you. Is it free? No. In order to try it, it's 26 cents a day. Let's get serious. So for $7.95 for 30 days, why don't you sign up, take a look at it, support what we're doing here? We'd like to help. I'm Ira Epstein. You have a good day, and I'll see you all come Monday.